I'm Jarrett Carpenter, and this is More Than Blockchain. On this episode, I want to talk about 3 events that are going to impact Bitcoin price. One of these events has actually already happened, and 2 are going to happen in the near distant future. So let's start with the event that's already happened. The Bitcoin halving occurred on April 19th, 2024, where the block reward, which is given out to the miners to secure the network, was cut from 6.25 Bitcoin down to 3.125 Bitcoin. Now, what this is a supply shock. Instead of issuing about 900 new Bitcoin out daily, we now are only being issued 450 Bitcoin daily, which is quite the supply shock. This means that miners basically have to use twice as much energy to get out the same amount of Bitcoin that they were getting. And because of this, historically, it's normally about a year after the halving where we start to see Bitcoin price really take off. This really has to do with the demand aligning with the supply shock, miners going offline, the overall network basically rebalancing and getting ready for the future. Now, once this happens, historically, a year after the halving, we've seen Bitcoin price take off. And that would set us up for a crazy price appreciation in this spring of 2025, which I do believe will happen. But the question is now, will we actually see price pop off before that? Because from all the institutional interest and institutional investors, we may see that price climb a lot quicker and a lot sooner than the spring of 2025. I'm even thinking that we may have a crazy crypto summer and see $100,000 Bitcoin somewhere between August and September of 2024. We'll have to wait and see if that happens. But I think understanding the halving, even though the event has already happened and it's not going to happen essentially for another 4 years or 210,000 blocks, understanding the halving is really important. So whether you're listening to this on a podcast platform or on YouTube, I'm going to go ahead and leave a link that explains the halving. And I'm going to leave that below. So go ahead and check that out. It's about 3.5 minutes. But understanding the halving's relationship to the Bitcoin price is a really, really big part of Bitcoin and the overall cryptocurrency market. Because as we know, as Bitcoin climbs, it takes with it the rest of the market. Now that we've talked about the Bitcoin halving, let's dive into the other 2 events that are going to happen probably in the next 12 to 16 months. The first is a political event, and that is the US election. Now, whether Trump wins or Biden wins, there's always uncertainty in and around that time in November, so I do think that we're going to see a dip in Bitcoin. And I have to say, it really depends on who comes into office, because unfortunately, in Washington, we have seen a split down the aisle, more or less, for most things considered here, as far as who's pro-Bitcoin and who's not pro-Bitcoin. Republicans have come out and have been a lot more open to Bitcoin and Bitcoin mining and cryptocurrency as a space and as an industry, and even as a new asset class, while the Democrats have not been so open. They have been led by Elizabeth Warren, and they are proposing regulation and policies that would honestly send cryptocurrency within the US context back to the Stone Age. And if that were to happen, for me, it would be a super sad thing, because the US would lose out on a lot of people, probably myself included, who would start to take their talents elsewhere around the world. Other hubs are growing all around the world that have to do with crypto because countries are being accepting of it. Countries are trying to adopt the technology, and they're bringing in people who are first and foremost blockchain coders, and then people who have actual experience in Bitcoin, Bitcoin mining, Ethereum, and a whole host of other things that have to do with the blockchain-backed digital ecosystem. So the US election, unfortunately, is going to affect Bitcoin price. Now, I think in and around the election, we'll see a dip in price just due to the uncertainty of who will win. Because whether it's on the left or the right, both parties are not really excited about what the other party will do. And just generally, this is a political macro event that always seems to make markets scared. We do see downturns in and around that time. And it's also interesting to think about that whether it's Joe Biden or it's Donald Trump, we may or may not see different policy come out of Washington that is either pro or kind of against Bitcoin, crypto, everything having to do with blockchain and money and value that goes over the blockchain rails. So that's the second event. And then finally, the third economic event, which I'm calling an economic macro event because of the way that it will influence the rest of the world. And that is quantitative easing, QE, or just good old money printing. Whoever wins, whether it's Joe or the Donald, by the spring of 2025, as they come into office and they start to propose all these new policies and they are saying we need to do this as Joe did. Joe had his infrastructure bill. I don't know what Donald would have if he wins. I don't even know what Joe would propose for his next 4 years. The bottom line is the Fed will print money, probably trillions of dollars, and this will absolutely affect the Bitcoin price. Every time in the past that money has been printed, It is basically a time where Bitcoiners look at the charts, whether they're institutions, they're retail investors like myself, or anyone, and they're saying, wow, if they're going to print more money, I'm going to buy more Bitcoin. Because Bitcoin is a finite asset that, you can't make more of it, right? But if you can make more dollars, we need to get away from the dollar. And unfortunately, the printing of the US dollar will affect the rest of the world, and especially countries who have their currencies pegged to it. We printed a lot of money in 2020 and 2021, which led to crazy currency debasement and overall inflation in countries in Latin America, especially in Colombia, where I currently live. This money printing affects the world, as I've just said. Its ripple effect can literally be felt through the entire planet. Maybe not the next day, but within about 12 to 24 to 36 months, other balance sheets get thrown out of whack as there's just more dollars in circulation. So, with that said, those are the three things that are probably going to affect Bitcoin price over the next 12 months. You have the halving, which, like I said, has already happened, but it still is impacting the overall Bitcoin mining industry and the overall Bitcoin network. Secondly, you have the US election. It's going to be interesting to see how that cookie crumbles and then how that impacts Bitcoin price, not only in the short term, but potentially in the long term. And then third, you have quantitative easing, or QE. The US is in a place right now where we need to print money to pay off our debt. And that will likely happen in the spring of 2025, just like we did it in the spring of 2021. As Raoul Pal, the macro investor, often talks about, we are in a debt cycle, and the debt cycle just happens to actually align with the Bitcoin halving cycle. So as Bitcoin becomes more scarce, we're starting to print more money every 4 years. Hopefully this episode provided you some value and some context about the big macro events that are happening in Bitcoin or have happened to Bitcoin that will likely impact its price. If you enjoyed the episode, please go ahead and share it with a family member, friend, work colleague. As always, you can find us on social media at More Than Blockchain. And no matter where you're listening to the podcast, whether it's on YouTube or through a podcast platform, please go ahead and subscribe. Bitcoin is moving forward. The industry is growing. More interest is coming in from institutions, even sovereign nations. And as it grows, it's kind of important to stay up to date on. And that's what I hope to do here with More Than Blockchain. So thanks for checking out this episode, and I'll see you next time.